Absolutely would agree with that. I mean, 7 years to the day, and they lowered rates to 0, 6 years of adjustments. There's still obviously a lot of congestion in the system, but some of the things are good. I mean, we're seeing wage inflation, unemployment rates lower. The housing market is basically starting to grow legs, and consistent legs. Consumer confidence is up. So yeah, I do. And we do have to remember that the Fed's going to raise rates tomorrow because this has been an emergency measure, and emergency measures are no longer warranted. It wasn't meant to be till perpetuity. The markets don't have to be perfect, but we can definitely accept a quarter-point rate hike.
What about in the statement? I mean, we mentioned there the most keenly awaited Fed decision in more than 9 years, so it's really going to be so closely watched. I mean, highly expected that we will see a rate rise, but it's really that statement and the commentary that follows that will be closely watched. What are you in particular looking out for?
Yeah, no, exactly. It's going to be what she says afterwards, because I think consensus realizes that their dot forecast is significantly higher than the market. Maybe their forecast of where rates are going to be a year or 2 years from now, that needs to be, maybe the expectations have to be managed a little bit better. But I do believe Yellen will continue to do a great job at telegraphing the message in granular detail, that her forecasting ability has been wonderful, and she'll be data dependent all the way.
Ben Bernanke also saying, I guess, that panic has a lot to do. It's a large psychological component, I guess. You know, it comes down to a general loss of confidence. People pull their money out. They don't want to participate, and they look to get into some of those safest assets possible. I mean, we've seen, I guess, a bit of panic over recent days, haven't we? Are we seeing a similar sort of situation at the moment ahead of the Fed's move?
Not really. I mean, we see the stock market, a pretty good knee-jerk reaction today. Not really seeing it. I mean, seeing people putting, actually selling short-term rates just a little bit. Safe havens, not really. Gold is flat to down a little bit. There doesn't seem to be a whole lot of panic. I mean, I think this has been so overdone and so over-telegraphed that I think people are just waiting for it to get over with, so we can move on with following markets, following fundamentals as opposed to narrative.
What about the US dollar moves? Because I guess one of the key headwinds over the past 18 months or so, particularly for commodity prices, has been the strength in the US dollar against just about every other currency, Larry. With a rate hike almost a certainty tomorrow, do you think a reversal of this trend is unlikely?
You know, I think short-term, the dollar could definitely spike higher, and I don't think it's going to be tomorrow. In fact, it could be the opposite, buy the rumor, sell the fact. But I think short-term, yes. But I think medium or long-term, I continue to believe the dollar has a valuation problem, and there's so many different things that could potentially go wrong, and there's so much positive risk premium in the dollar versus other currencies that I think, you're almost better off taking the other side of that trade right now, because it tends to be so crowded. So many things could happen with reversal in our economics. Or European economy could do better than expected, et cetera, et cetera. So I think there could be, a dollar devaluation come, 6 months from now.
Larry, Brian Parker from Sun Super. Let's say the US dollar doesn't actually devalue, that it does continue to strengthen. Just how much of a risk is that for the US economy? Can the US economy, is it robust enough to be able to tolerate a stronger dollar at this point?
Yeah, that's a great question. Against the euro, I mean, consensus is talking about 95 to parity this time next year, and the bigger houses seem to think that's fundamentally okay, that we can digest that. I'm not sure we can, and I think it's more to the point how we get there or why we get there. I'm hoping we don't. I'm hoping that this is overdone and that the dollar doesn't continue to climb that 25% that we've seen. But yeah, I think that could be disastrous for the commodities sector in general.
Wanted to ask you, Larry, about the inflation read that we got through today. Obviously, one of the big concerns for the Federal Reserve, but coming in line basically with expectations today, it seems like it is heading more back towards the Fed's 2% target. What did you make of the reading, and I guess how did the market take it?
Yeah, I mean, you take energy away, and the CPI number was pretty healthy. And then, you know, I buy things here. I see prices going up. I see people shopping, and you know, take energy, take gasoline out of the equation. We have to remember that in the United States, gasoline or oil in general is more of a consumer product than an industrial product. So take that out of the equation, and we do have inflation. I think it's actually being wrongly subdued by the way they measured it at the U.S. government.